Good morning, friends. Can educational and medical institutions claim tax exemption even without registering themselves under Section 12AB? Yes, they can, provided they fulfill certain criteria laid down under the relevant provisions of the Income Tax Act. I am Ashish Agarwal from Team NGO Enabler, and today we shall discuss how certain type of educational and medical institutions can claim exemption directly without any approval from the Commissioner of Income Tax or filing for any registrations thereon. You all must have heard about Section 1023C. Almost provisions similar to that of Section 12AB are there in Section 1023C too. However, still under certain subclauses like 3AD and 3AE of Section 1023C, organizations can claim exemption directly without any registration or approval. Let's check those subclauses directly from the Act. So if we summarize the key conditions to claim exemption, the first and foremost will be such institutions should be solely for educational or medical purposes, as the case may be. The total annual aggregate receipts should not exceed Rs 5 crores, and the income of such organization shall not be used for any private benefit. The only compliance expected from such organization is filling the income tax return in form ITR 7, properly selecting the section and its subclause in the relevant row. We would again like to remind you, such organizations are not required to apply for an exemption or obtain approval from the Commissioner of Income Tax Exemptions while registration under the said section. Such organizations are neither required to apply 85% of their income during the previous year, nor they are subjected to audit under the Income Tax Act. Now, to get a deeper understanding of the said subclauses, we need to mainly understand two important terms on which the entire focus is there when it comes to claiming exemption under Section 1023C without any registration: solely and annual receipts. Let's take them up one by one. Neither the already existing provisions nor the amendment brought in by Finance Act 2021, where the limit was increased from 1 crore to 5 crores under these subclauses, defines the meaning of annual receipts. Since no guidance is available in respect to this under the Act, the only reliance we can put is on judicial pronouncements. But interesting facts is that there are many contradictory views on what and what not should be considered while calculating annual receipts. Some judgments are in the favor of not considering the capital receipts, such as sale of any capital assets or maturity of any investments, as part of the annual receipts because of their capital nature, while many others are in the favor of taking such capital receipts in account for deriving the threshold limit under the Act. In our opinion, however, the total receipts should be considered for the purpose of deriving the threshold limit of aggregate annual receipts, irrespective of the nature. You may ask, why? Firstly, because the word aggregate has been used, which can be interpreted in many ways by different experts and even judiciary. Some might include the capital receipts and some may not. We would prefer including it. Not the maturity of investments, but yes, at least the sale of any capital asset. Secondly, it's a safer approach for the organizations to avoid any litigations if they consider the entire receipts and still fall below the threshold limit. Now, let's move on to the next important term, solely. Solely here implies exclusively and only. The organizations should be only running an educational or medical institution, as the case may be, and not any other activity which they can claim to be of similar nature, like running a tuition center or maybe a diagnostic center. Also, they cannot carry out any other activities simultaneously except which are incidental and related to the main object. This view has already been affirmed by the Honorable Supreme Court in the case of New Noble Educational Society. We have already covered the case law extensively in our earlier video. Just click on the I button above to watch it. It will give you more clarity and understanding about the intention of the legislature with regards to the exemption under section 1023C 3AD and 3AE. So friends, I hope we have been able to develop clarity on the two important subclauses of section 1023C and the criteria for claiming exemption without any registration or approval from the Commissioner of Income Tax. For any clarifications, you can mail us or comment below. For more such updates and tutorials, keep watching our channel. Don't forget to subscribe it and put your notifications on. You can also follow us on Facebook, Instagram, Twitter and LinkedIn. Thank you.